first step is to take a close look at this year and make sure we have all the income and expenses and the balance sheet is right for this year, and so to eliminate the current year as a problem for the discrepancy.
Okay.
Then we're going to look at, prior year, end of year balances, both in the accounting system and the tax software and then tax return, and just see if those match up or where there might be a difference there.
Okay.
So for our example here, we have a skinny skeleton of a tax return here for this example, just to show this portion, what we're focused on. We'll go with the assumption that we've already looked at everything, and it just seems to be a prior year issue. They don't have any idea why or where or what it is.
But we know your first starting point, that the current year is accurately reflecting what's going on. So that's definitely your starting point.
Yeah, because you want to make sure that's the case before you go stirring up the client or getting them to stir up the prior preparer or whatnot.
Okay.
So assume the client has no idea. Assume the prior preparer is retired. He's on an island in Tahiti, and you're just not going to get any help from him or her.
Right.
So, one thing you can do or look at is there are abilities to do adjustments to the M2 to at least get it to match the retained earnings, so that moving forward, everything is in sync. So you can't figure out and solve what's wrong in the past. The client could potentially have a little bit of risk there if it got audited for past stuff, because somewhere something's just not quite right.
Right.
But you can't get to it. We're going to have an adjustment, another reduction to basically try to get the accumulated adjustment down to the $5,000 that we're reflecting for this year. So we would go in here to our M2 screen. There's another reduction screen. They just require the details of it. We would enter prior year adjustment here. Can also be seen as referred to in some places PYA. Not CYA, but PYA.
Yeah, two different things, I guess.
Yeah. You may be CYA and the other accountant's behind. I'm not sure, but
right.
Anyway.
Right. He's in Tahiti, so he's don't worry about him.
So if my figures are right here, and I go to review the return, we will see. So we have our $5,000 in retained earnings here. And when we get here to the AA account at the end of the year, that also matches $5,000. You'll see our adjustment here. So you'll see that coming into play with everything.